Yes, what's going on, team? I wanted to run you through this beautiful 3R trade that we got at the end of the week on Friday. Yeah, this was a nice trade. We did have a SL taken on EU on the same day, a -1R, but we came 2R up for the day, so that's a W for the team. This was taken in the Discord. All the analysis was shown as per usual. Obviously, last trade I broke down was this EU 3R. I showed that in the last video, so if you didn't see that one, make sure you go check that one out. But yeah, we did get a lovely trade come here. It did go back to entry, but then it pushed all the way up. Literally, like, if you'd got in at this point here on like a retest during the New York, if that was to be like your entry kind of condition, you would have closed out in 5, 10, 15, 20, 25 minutes. You would have closed out a full like 3R trade, which on like a 100 or 200k account, you could have made like 3 to 6k risking 1% on that trade. So yeah, it's nuts. But let's go ahead and pull up. Let's get rid of these drawings. Let's go and pull up what we saw on EU and GU for the day. And we'll go back to when we saw it, Thursday, Friday, at 6 o'clock in the morning. Yeah, cool. So we'll start here. So this was like how we were determining the bias, as per usual, as I've shown in every other video. We had previous fractals. Most recent fractal broken was going to be... This one get broken? This one did get broken. It was going to be this one here. But yeah, basically, long story short, I don't need to mark it. It was just so you could see. But we're trending to the upside, so I'm looking for buys for the day on the market on EU. And for GU, yeah, same again. This was the fractal. This fractal got broken as well. Was this on? Yeah, that fractal got broken. So same thing, looking for buys for the day. Scale into the 5-minute time frame. Don't need any fractals, just need the session indicator so we can see the previous session print. I'll show you the EU loss to begin with, just to give you an understanding on why we took a loss, but it was still a very much a valid trade. If I'm on replay mode, Friday the 28th of November, so as you can see, we printed out this session here. We had news at 7:45. Obviously, we don't start trading until 8 anyway, so that followed the 20-minute rule because we just wait 5 minutes into the London session before taking any trades, which we're unlikely to get any trades anyway within the first like 5 minutes of London. So we literally let the session play out. We had sweeps to the downside, which obviously is what we were looking for the day because we wanted to go ahead and buy the market. We had this sort of like motion being formed here, this wave structure being formed. We went ahead and made a high down at this point here, candle body closure through that. We were then looking for rejections to come back for an entry point off the 0.618 level, as you can see here. So if we play this out, trade then wanted to obviously pull back, got tagged in at that point. We were letting then the trade play on EU. I held EU all the way through, and as you can see, obviously it came down here, stopped me out at this point. This is where I got taken out of the trade, and then we went and fell lower anyway in this position. If you wanted to see what the trade looked like as an idea, my stops go on the 1.025 level. I simply target a 1 to 3R every single time because that's what I've got my data built on. As you can see, tagged in at this point here, came back down and just fell to an SL. So that was a stop loss taken on that. So I then wasn't really interested too much in EU for the London session. I was then more interested in what GU was doing. Obviously, I was looking at both at the same time, so I was setting up and seeing what both was doing. We had a sweep of liquidity to the downside down here, and we were then looking to obviously place our breaker structure to the upside. So this was where our breaker structure came from, was from this, again, sweep structure that we were forming here. We broke above it. And that was our breaker structure. We were then looking for a retracement for a tag in. So this was my setup. Obviously, the first fib would have gone to this level. We didn't reject enough, so I simply extended the fib until we were finding this key entry zone to go ahead and enter into the market. Now, we did see some drawdown from this trade, but we did actually go ahead and hit a 1 to 3 again. So 1.025 level for the stop loss. Simply target a 1 to 3, or you can target the previous session's liquidity. You could target whatever you want to target, you can go ahead and do so. But for me, I've built my data based on a 1 to 3 risk to reward ratio, like I say. So this was then obviously, we're tagged in the trade on this candlestick, facing some drawdown. Got very close to a stop loss, but I had this across a couple of raw accounts, so it kept me in the trade. Then traded it through the New York session. As I mentioned, we came back all the way down to the entry point, and then we pushed off for a full TP. As you can see, that was a full TP there at the 1 to 3 risk to reward ratio. This trade was a little bit of a longer trade for the normal kind of Asian sweep duration that we see on the trades. However, a profitable trade is a profitable trade. We got our setup during our kill zone range. We had a sweep of liquidity. We had our breaker structure opposing that directional sweep, which aligned with our high time frame bias. We had retracement into sort of like our sweet spot entry zone here. got tagged in, pushed all the way up, came back to an entry, and then went up again. But what I think is important to note on this is why like I've built my data and no longer use break-evens. I used to use partials at this higher fib level, and I used to use break-evens as well when we got to this higher fib level. But literally, like, this is a prime example of a trade that for me would have ended up being a break-even when it could have been a 1 to 3 risk to reward. Because this trade, so if I just go ahead and replay it to when this trade broke the fib, as soon as I tag this fib level here, so to be honest, it was actually this point, as soon as I tag this level here, I go to a break even. That's what I used to do. I used to go to a break even on the trade. If I then allowed the trade to carry on playing, it came all the way down to my entry point, pushed off. This is where it would have exited me from the market and then went to a 40p. So data is so important in trading. Like, if you don't have data in trading, there's you just can't trade, whether that be live market data, whether that be paper traded data, whether that be back tested historical data, simulated data using an algorithm, whatever it might be. Get the data. There's no point trying to like claim you can do what you claim to do without actually having data. Like, this back tested model in particular has been taken over like 100 trades with an above like 45 to 50% win rate on every single trade, multiple sessions, tested so many different things with this model, like fixed entries, previous session liquidity points, break evens, partials, you know, targeting less of an RR on the trade, targeting more of an RR on the trade, trading during an extended period, shorter period, different session like kill zones, whatever it might be. But without having all of that, there's really no confidence behind anything that I'm doing. Like, to be able to do anything, I need to be able to say, yeah, I've tried everything else. Like, I've put this model through the rigorous testing that it needed to actually go ahead and make me profitable. You know, if I was still just gambling the market and being like, oh yeah, I'll just take partials on this trade at like 75% maybe on this one, and 25 on the next one, and 50 on the next one, and then I just go to like a break even on this trade, but I don't go to a break even on that trade because I just didn't feel like it that day. Like, just you need to just remove all of these dumb decisions and discretionary movements and just be like, right, set, forget, like, here's my checklist, did it make it? Like, for me, it's sweeps, break structure, retest, bang. Once I'm in that trade, that's it. I set my levels, my stop loss, my take profit, which again is literally set based on a mathematical level, like 1.025 fib. Easy. Take profit, 3R. That's it, easy. Again, I just look at a number. And it's like, you don't have to make all of this complex. You just follow what the market's doing and then gain that edge through data, through back testing, through building what you actually came to do into a spreadsheet, into a Google Sheet, into a backtest platform, and saying like, look, here's my journal, here's my previous record of what I'm saying on paper. Here's my win rate, here's my average trade duration, here's my, you know, maximum loss streak, here's my maximum win streak, here's the average duration that I hold a trade, here's how quick I hit a TP, here's how quick, you know, all of these numbers you can literally get through a simple platform, and there's this really no excuse behind it. Especially if you're learning to trade, having that data from day one is going to be the best thing that you ever did, because it not only gives you an insight into what you're able to do, but it gives you an insight in the future in what you weren't able to do, and also your progression points. Like, you look back at trades, I mean, I look back at some absolutely dreadful trades that I used to take, and I'm like, well, just what was I doing first of all? But then I'm like, okay, let's take out the whole like funny side of it and what I used to do in the markets, and be like, where was I actually making my mistakes? What was I doing wrong? And it's kind of allowed me to dial into the important stuff. Because back then, when I was trading like fair value gaps and SMC concepts, ICT, TGR, whatever it might be, those were like the main mentors and people I was listening to. I would have to decide between like this fair value gap, this fair value gap, this big market imbalance here. Like, where do I enter? What point do I enter? And just generally getting confused. Like, once I just cut all that out, started implementing something super simple like a fib level, where it's like, okay, if it hits this level, then I'm in the trade. There you go. There's nothing really that you can go wrong with something like that. And I think that was the best thing I ever did, is simplify my trading. I actually started out doing a lot more complex things in the market than I'm doing now. And once I just realized you should just stop all of that rubbish and just go to a mech model, yeah, I found success. So go to a mech model, trade a simple thing. But this was basically the 3R trade that we got. Obviously we took the 1R loss, but we ended up 2R on this trade, and we finished the week as well. I think we got another 3.2R on ORD-CAD with the SMC model as well. So we ended up a good like 5.2R up on that trade. But yeah, besides that, my name's been Lewis. Appreciate you sticking around for this trade recap, and I'll catch you all in the next one.